Hello and welcome to Simply inTAXicating. Before the commencement of the winter session, the GST bill was largely seen as a low-hanging fruit. Even the NDA government never thought that it will prove to be such a Himalayan challenge. But the stiff opposition led by the Congress party finally managed to get the GST bill being put on the back burner. Most of the experts in the industries and international observers feel that perhaps the GST bill is dead for long. We have four distinguished guests to discuss the prospect of the GST, the road ahead, going forward, the different technical aspects of the GST, apart from the Constitution Amendment Bill, the GST law, the business processes. Recently, we had Arun Jaitly panel talking about the 15% RNR. To discuss all these aspects, we have Mr Sumit Dutt Majumder, the former Chairman, Central Board of Excise and Customs, Mr Bipin Sapra, partner E&Y, Pratik Jain, a noted indirect tax expert, and Mr Kumar Verma from Schneider Electric. So let me start with Mr Majumder. Sir, so what are the prospects for the GST bill now?
Even if this was passed in this winter session, the Constitutional Amendment Bill, I have my serious doubt whether it could be implemented from 1st of April 2016. The reasons: quite a few business processes have not yet been finalized. Your major thing is that what is the threshold? On that, Centre is asking for 25 lakhs, states are asking for 10 lakhs, they have their reason. You have the CA, Chief Economic Advisor's report, which says that it should be 40 lakhs. You had interviewed Mr. Sibren Norson and about a few months back, and he said that everywhere and the threshold should be high so that the small business is not
impacted,
affected, because it's not cost effective. We put it that way. That is not cost effective for government. That is very cumbersome. So we have not yet decided that. We do not know what is the number of exemptions. Now the Central Excise has more than 300 exemptions. The state's VAT has 98, 99. So it has to be somewhere in between. So those have also not been decided. Then the GST laws. Your main thing, because I always maintain, the crux of GST is that all the complication is because of the treatment of the interstate movement of goods. For Centre, it is no issue. Centre is everywhere. But that is important. And for that, it's necessary to have place of supply rules, particularly for services.
What we have to realize out here is that it's not like any other tax law, that you bring out the tax law today and you can start working on it from tomorrow. All over the world, whenever GST has come in, it has taken at least 1 year or more to transition. Malaysia is a case in point, which is the most recent example of a GST being introduced. Malaysia introduced GST from 1st April 2015. And they had a clear law in place from at least 1st January 2014. 1 year, 15 months, they had the law.
Yes.
And it took them the whole of 15 months, the industry and the department, to get ready, and they were still not fully ready when the law finally came in.
Yes.
And if India is going to do that, they also need a clarity. The industry has been working with this, the fuzziness of the GST when it is going to come in, have started working and trying to implement processes which would get them to the eventual GST. Unfortunately, neither they have the law, neither they have a clarity on too much on the processes, yet they are beginning to work. And these delays are going to impact them immensely, because the uncertainty which comes in with the GST is impacting their whole economy as a whole.
Yeah, Pratik, you have been watching
I think more or less the points have been covered. I think GST has 2-3 ingredients, question that you need to ask. Whether government will be prepared for implementation of GST in time. Now April is ruled out. Earliest you're looking at is October next year. My take is they would perhaps try for April 17. Beyond that, they will not, because in the last couple of years, no government would want to have GST. And if April 17 does not happen, then it's certainly then goes into a limbo.
Right.
But a positive thing is that government is prepared. IT infrastructure is getting ready. The laws are getting ready. Processes are out, etc. The other positive is that industry is putting a lot of pressure. I recently had a meeting with all the major industry chambers, came together and in fact passed a resolution for early implementation of GST. I think the question which is, as Bipin said, a problem as to why GST has not happened, is essentially political, nothing else, right? If you look at the three major demands of the opposition parties, one, which is 1% additional tax, has already been, sort of agreed by the government. The other two demands, I think the opposition knows cannot be fulfilled. Okay, 18% rate to be mentioned or enshrined in the constitution, and a dispute settlement authority to be revived, because this was discussed amongst the states. All the states resisted, and then they said, okay, we will remove it. It was there in the earlier draft, and nowhere in no major tax you have the rate. But I think these two are unrealistic demands, and therefore, unless there is a common ground there, unless there is a political will, it's not going to happen. And I'm not that optimistic that, like Mr. Majumder is saying, that it's just a matter of time. Of course, it's a matter of time, but whether it's 6 months or 1 year or it's 4 or 5 years, is something which I'm not sure of. So it's unfortunate. We will have to see what happens.
If you see the stakeholders, union government and the state governments and the trading community, they all are asking for this.
Yeah, the game.
So if they all are asking for this, there's no reason why it should not come.
Okay.
So there seems to be consensus on that. I think it's only the numbers in the upper house that is causing trouble.
Right.
So as long as that consensus remains and it keeps building up, and there is I think mounting pressure coming from the trade industry. Pratik mentioned about the meeting which happened recently, and all the trade associations and 1,000 people attended that that forum.
Right.
Where the finance minister was there and all of that. So if everybody is asking for this, and we know that dovetailing this with the ease of doing business, making in India, we can't afford not to have this.
Absolutely.
So that's my comment.
Absolutely. Now that Pratik sir has touched that point, that the three demands of the Congress, 1% in any case, the finance minister openly said that government is compatible with that demand. There is no issue. The two aspects. One is that, of course, 18%. The GST rate, the single GST rate, as suggested by Arvind Subramaniam panel. So, sir, looking at that, the RNR 15 to 15.5%, how do you, the states have not commented. Not a single state has commented on that.
What you have to realize is that if you do the maths, if we have the complete base of the economy, you need only a 10% to get the same revenue as what is there today. That is a simple calculation. The problem arises is that depending on what exemptions are given, what goods go out of the base, then only would you have to move to a higher RNR. And that is one which is not finalized even today. Till the amendment bill gets finalized, and what would be the difference, whatever would be the rates of goods and services which finally comes in, that uncertainty remains. But 15 and 15.5 is a rate which is possible, absolutely possible, given the base which he has mentioned in his report. And he has talked about splitting it between 12 and 18% in case 15 and 15.1 rate is not possible.
Right.
And from an inflationary perspective also, he has talked a lot about where that would be good for the economy.
I have a different view. I think we are far away from exemption being removed, and in fact, I think that below a concessional rate of 12% or whatever they're talking about, the government might have to actually bring in a further concessional rate. If you look at some of the items of mass consumption, let's say edible oil, for example. Now, there is no excise duty today on that. Rice, I'm talking about packed rice. So, these are effectively 5%, 6% effective tax rate, VAT, etc.
Right.
Now, for them to move from 6% to 12% is going to be a huge exercise. So, I think it's a very complex country that we're talking about. So, I think as a concept, yes, exemption should be reduced. To what extent you will be able to implement it, and therefore I'm saying that in this budget, one will have to see that out of 250, 300 excise exemption, if VAT is only 99, does the government take the hard step of reducing many of those exemptions and removing it? Because you can't just eventually do it one fine day that everything is removed. You have to do it a gradual process.
Yes.
And therefore I think 18% does come as a pleasant surprise. I will not be disappointed even if it is 20, frankly, because it will be most of the items today effective rate is 25, 26%. So 20 is not bad. Industry is going to be happy overall, except for the services sector where services goes up significantly. But 20% is also not bad.
And I think that is one of the presumptions of that Subramaniam panel report also, that a large chunk of informal sector, when the GST comes, will become a part of the formal sector and the tax base will go.
That's right.
So probably, he is looking at that aspect. Yes, sir.
I'll take you back from the point that you started, that what are the three controversial issues.
Right.
So I'll come to the third one also later. The first one, of course, that 1% tax. Finance Minister in that meet with all the chambers,
yes.
he has used the exact words he used is that I will go back to the states. It's an arguable. He says that view is an arguable
fairly
one.
Arguable.
Fairly arguable one.
Right.
And I will go back to the states. That means he is agreeable, but then states will have to. That rider is there.
Right.
So we have to be careful about that. That rider is a big rider. The second point on the dispute resolution thing also, I see a window in the provision itself. So I just want to tweak it a little bit. The provision says the GST Council will give the modalities of resolving dispute, not resolve dispute. The GST Council will resolve dispute, he didn't say. Modalities. So what I would suggest that they should specify the modalities in that draft itself. That should satisfy Congress. Because once the model is there, the certainty is there that who will be a user. The modalities can be done there itself instead of leaving it to the GST Council.
Right.
This is the second point. But otherwise, there should not be any problem on that. Third one, I think all of us will agree that it is impossible to put it in the Constitution. Now, the point is that 18% again, I would go with Pratik. That I think 18%, anyway, but this is the finding of the committee, so I cannot really controvert it. I don't have the wherewithal to controvert it. But gut feeling is that 18% is low. Bipin has talked about the hidden taxes. There are a lot of hidden taxes people are not aware. Like I give the example, today's excise and service tax is vatable at each point, but the moment it comes out of the factory, state VAT comes, and that is on the cost of the goods and your excise duty and service tax. So that is a hidden tax. So like that, there are many hidden taxes people are not aware, they're paying. Right. So they had taken a basket of goods and they found that it was something around 28% before an item comes on the table. So roughly average. So from 28%, if you can bring it up to 20%, I say it's a big come down rate-wise.
No, I have a slightly different take than what Mr. Majumder is saying. I think 18%, of course, one would like to see what are the underlying assumptions which this Subramanian committee has made, what data they have considered to say that 18% seems to be the right one. But if you broadly look at it, I think Centre gets the power to tax transaction multiple times, which they don't have authority today under Central Excise law. So they get a huge chunk of additional revenue. State gets a considerable chunk of service tax revenue. I'm sure if he has come out with 17-18%, he would have better data than what we have now or what we understand to talk about 17-18%. So I would assume that 17-18% seems to be reasonable for the merit rate as we call it, or the standard rate as we call it. And my other, reaction or the reply to the other point, whether 18% should be there in the constitution or not, I think we all said that this is asking for something impossible.
We will move from the rates now to this dispute settlement body. I mean, of course, as you rightly said that there was a provision which suggested a modality. What could be that modality?
The main point of this dispute settlement authority is that the one from whom the directions are flowing should not be the judge of the action of not following those directions. So that is what will happen. That is the concern of the many people, and perhaps Congress also. Because the 115th Constitution Amendment Bill, when it was put, since I have personal experience of that, I was in the board at that time. So this was discussed, and with Attorney General, with Solicitor General, the Law Ministry, and this was discussed that to what extent it will interfere with the state's fiscal autonomy. Because we wanted a body which is independent of the body who is giving direction. Because if you see the disputes arising out of the recommendations of the GST Council.
Pratik, what is your suggestion about this architecture of this kind of body?
I think the initial dispute settlement authority, I think, is a very welcome move, because it ensured that if there are two states which have a dispute, or a central state have a dispute, or some state is not willing to accept the GST Council's recommendation, because mind it, it is a recommendation still. Right, then what do you do? Every time you have to go to Supreme Court and and all of those things. Right. And Supreme Court has so many. So there was supposed to have be a separate body, which of course states resisted. They thought that's it's a hit on their fiscal autonomy and things like that. I really can't think of a mechanism which is much different from that. Instead of creating a separate mechanism, as what Mr. Majumder is saying has to be looked at, then the GST Council in that provision itself, you have to talk about a body. But then you say, okay, what should be the composition of the body, whether it should be a retired high court judge, this and that. So in that sense, when you start putting that framework, it becomes like a dispute settlement authority that still will be resisted by the state.
See, the problem which the states had with the earlier body also, one of the same was what would be the representatives of the state vis-a-vis the center while deciding the final constitution of that body or the voting rights. Or so even if, can it be equal? Can it be, would it be similar to a GST council where there's today also the dispute on whether it should be 1/3 the center, 1/4 the center? All those things have to really be there. Who appoints? So those are the things which are in the mind of the authorities. And I think if there was a mechanism to for the appeal to the Supreme Court, I think that can still continue, and that would be a good mechanism of putting a final settlement. Because Supreme Court can then be as independent a body as possible in this country.
It was there in 115 Constitution.
Yeah, it was, sir, absolutely. So it's time now to move to some business processes reports. In fact, in between those 3 reports were out.
Four
reports rather. Yes, returns have also come. Yes. So, Mr. Verma would like to throw some light. I
think no, it was from the industry point of view as you need to take steps to prepare. So, in that direction, since everybody was waiting, and as Bipin mentioned about the uncertainty, it helped to remove uncertainty to some extent that which direction the GST would go. So, I think in that sense, the report on registration, refund, I guess payment, and
yes,
there was one more topic. They helped the trade and industry to kind of peep into the mind of in-part committee, what's going on.
Right.
And it also helped them to understand what architecture they have, because this also gave a lot of inputs on that architecture that government is working on for seeking registration, for tax payment, for interlinking of credit and so on and so forth. So, and in fact, there were a lot many reactions, there were a lot many positive reactions after this. There were a few suggestions also coming out of this. So, like from the trade industry, the request is that whatever work is going on inside the closed doors, periodically they should come out in such reports so that we get prepared.
Right.
We get prepared. Even if there is a delay of 6 more months or 1 more year, I think that's fine. But if the information keeps coming out in the structured form, we are able to peep into the minds of the people who are taking this forward.
Yeah, I mean, if you look at this one of the reports here, they talked about this invoice matching.
Right.
How welcome this kind of.
I'll put it this way, as Pratik has already mentioned, we gave a representation also to the industry bodies. The credit is a right. You can't diminish or destroy that right because somebody has not paid or somebody has filed return incorrectly or somebody has put the figure incorrectly. Matching principle is very good. Matching principle is very good to ensure compliance from the provider, service provider, or the supplier of the goods, but that should not be the yardstick for the recipient of service or the receiver of the goods. That is, credit should be denied. So it strengthens the compliance. I think it gives them a lot of data and material to the tax administration to go and get hold of that person and say that, oh, you have not paid taxes or you have not reported your turnover correctly, but it should not be a mechanism to deny credit. So that's the value.
What is the global experience on this
issue?
I
mean, I don't think there is any place where you deny the credit because the vendor has not complied with it. Of course, there are safeguards because government is giving you credit. Maybe much before the tax is actually deposited, right? Because you get an invoice on that basis, you can get a credit. The vendor might deposit the tax later, but you get credit upfront because on the strength of invoice, and therefore it is just like cash. And therefore there have to be safeguards. And I think there are inbuilt safeguards which are there. There is a registration number of the vendor which the buyer can always verify from the from online. There is a valid invoice which I have. I can also ask the buyer to ensure that there is a matching and things like that. And whatever is the matching is not there could be some format that you have to report it to the government. But beyond that, to say that if your vendor has not filed the return properly, then you will not get a credit despite paying for that. You know, if 18% is the credit that I have lost, I mean, my margin is 2 or 3% in most of the industry, in a trader community, or 5%, then I'll not be able to survive. So I think its provision needs to be relooked at.
So, Sapra, I mean, what is your view on this? You know, the 3 points which Pratik raised.
See, I think there can be no other view apart from what Pratik raised, because today the entire law is framed like the credit rules, that whatever compliance the person who's receiving the goods or services, can do, I cannot really look at what my vendor is doing. Tomorrow, what they are saying is that if your vendor does not comply, he complies with all the provisions of the law, but he does not comply with certain IT, he cannot upload, or he's not able to upload his data or return, or does not do that, then you cannot get a credit. And there is very little provision of going back and maneuvering that, or amending your return also. So they are putting it in a situation where if the tax has been paid rightly, you are still not able to get credit. Similarly, the case of registrations. What you have to realize is that the whole concept of GST is based on the seamless flow of credit. By creating these pockets or separate entities within one entity, not only are you stopping the credit, but any supplier between these registrations would also be seen as a supplier, and there would be a levy. It can be a levy, like in case of a stock transfer of goods. Similarly, suppliers within the of services can also be liable to a tax. Now, is this a type of GST we really want to bring in this country? Yes. So and I would want to go beyond what Pratik is saying, that IGST and CGST, definitely yes, that credit should be allowed to be used. SGST also. If you look at a company, how does it matter to me whether it's SGST or CGST or IGST? I am paying tax to the government. Whichever government is collecting the tax from me, I need a credit for me to pay my output liability. If I have an output liability, if I have paid my tax, they should be fully creditable. If they are not, if there is a problem out there in the law, or because there are various states or a federal system out there because of which this has been created, then there is a cascading happening. And that's not the principle of GST. And again, the effective tax rate in the country goes up.
Absolutely.
So there can be, like IGST as a mechanism for passing on the CGST, SGST of one state to another. Other mechanisms can be created, like input service distributors, for all IGST, CGST and SGST, and accordingly settlements can happen within the states, and then the central government can decide to allocate revenues. That can happen at a macro level, right. But from my transactional level, I should get complete credit.
Absolutely, yes.
The other thing I want to mention, although officially that GST laws have not yet come into public domain, but it has been now recognized as a base paper. In the other meetings, the government officials said there is a base paper for that, but it is not that it's a fake document from somewhere. So, if you go through this, there also, I have one comment to make. Not that I've gone into details, but I've seen a few things. Like there are some provisions of valuation, because my concern is on valuation wherever. That's MRP based and RSP based, retail sale price, minimum, maximum retail price, and all those things. So these are, it looks that many other provisions, I'm not going to the details, are taken straight away from the VAT rules, state VAT rules, which is not correct. Because our GST will be, I mean, it's a much more than the state VAT. And the yields of state VAT things should not come in the thing. And I believe that already, because a question was raised to the government officials in one of the seminars in Delhi last week. And the government official very clearly said that those things will not be there.
In the final draft, naturally.
It is not the final draft, so it is not be there. So I would suggest, since that document has come into the public domain, and since it has been recognized as a base paper for the GST law, and since it has been committed sort of by the government officials that within 1 month the GST laws will be put in the public domain. It has come into press also, right. Media reports. So I would suggest that let the trade industry work on this, on that basis, whatever is there, because it will not be drastically different from others. And why lose time on that? And put your objections. In any case, you can put it up, because the then member budget, Mr. Krishnan, had said in various seminars I had attended along with him, and he said very clearly that you give your comments. Like, for example, coming back, one important point I would say, exemptions. Now, you had mentioned that no exemption and all those things, which is impossible, utopian. You can't have it in a democratic country like India. Now, the power sector, infrastructure sector, there are certain exemptions. You cannot withdraw those exemptions.
On this note, let me thank all the panelists for richly contributing to the debate. Although the Indian Finance Minister, Mr. Arun Jaitely, seems to have given up on the GST bill, at least in the short run, the unanimous views of all the panelists is that the government should give it another solid push in the forthcoming budget session. No doubt, the April 2016 deadline is gone, as it can now be implemented only from April 2017. But if it does not happen, the India government may not be too eager to pursue it, as we would be too close to the general elections in 2019. Most of the panelists felt that the 18% GST rate was a pleasant surprise, as they were expecting a figure close to 20%. In fact, if states insist on higher rate, industry would not mind if it is 20 or 21%. So far as the three demands of the Congress party are concerned, the view of the experts is that at least two of the demands are not implementable. Although the industry and trade welcomes the decision of the government to share 4 reports on the business processes, but the issue of invoice matching to deny credit is found to be quite bitter in taste. They believe that the administrative purpose is fine, but the credit should not be denied to the goods or the services recipient for the failure of the compliance by the vendors. Similarly, multiple registration for GST is not a welcome idea. Let us hope the GST makers take note of all these suggestions and fine-tune the proposed GST architecture to be little more acceptable to the industry and trade. Thanking you all for watching TIOL.